Let's talk about Telecom. Shaw Communications growing its wireless business at a rate that's impressing investors, but with global smartphone giants warning about softening demand, it's a little more of a challenging environment this year for the wireless players. Joining us now to discuss these challenges in the wireless business and Shaw's growth plan is Brad Shaw, CEO of Shaw Communications. Thanks for joining us.
You're welcome.
I want to start there with the quarter that you reported earlier this week. And obviously, investors were pleased, the stock moved higher, analysts were pleased, the growth of the wireless business is impressing people. But then to have the likes of Apple and Samsung drop that on us this year, that they're seeing softening demand for smartphones. What does that do to Shaw as you try to grow that business? I mean, a large part of it is all of us upgrading to the newest and shiniest devices.
Yeah, even with that decline, we're very comfortable with the value proposition we're providing Canadians, and we feel there's lots of room for us to live into the opportunities for growth in the future. I always look at just even our churn rate of 1.28% going, wow, customers are pretty happy in that regard. And for us, we continue to build out the 700 network. We only have 25% currently built out, another 75% coming, so the service is only going to improve. And we continue to make the network investments to make sure at the end of the day, Canadians have a true wireless competitor and choice.
That's something that this country and that policymakers have been looking for a while, that fourth major provider. It would seem key to Shaw, if you want to become that fourth player, to take a sizable amount of business from the big boys, including BCE, Bell, and Rogers. Is that the plan here? You got to get more people over to your product?
Well, absolutely. I think you gotta, people gotta realize, here's freedom, where's the opportunity, people are shopping. When you hear or look at an article when there's $1.2 billion of overage charges on wireless within 1 year, how much is that per Canadian? And it feeds right into the opportunity where people can, they can binge their data, it's accessible all the time, and it's affordable. And that's exactly what we want. I think it's been pretty punitive when you look over the past years and somewhat abusive on what Canadians have had to handle. And so we're very excited, and we're just beginning. We're just starting. We're finally getting the network up. We're finally deploying all our capital. We have all the retail locations, over 700 now, and all the cross-selling opportunities with the wireline business in the West, new branding if we so choose, the business side. So we're excited about all those things. So it's course and speed.
Now, this kind of growth that we're seeing in your wireless business and the plans that you have, and you want to take on the big competition, this costs money. How do you raise that capital?
Well, absolutely. I think right now our leverage is just under 2 times. We just went to the bond market and raised $1 billion. We have a $900 million line of credit. So we're very well capitalized, very comfortable to continue to deploy the capital and compete. You don't underestimate the size of the big three and everything, but I really think they become a little bit lazy when I look at how they're serving Canadians, how they rate increase within a couple of weeks, how they're kind of really, is it about serving Canadians? Is it about giving value? Or is it about making profit? And I think, listen, we all want to find that balance in doing that, but we're very focused and very excited about what we can do with our balance sheet, deploying the capital, and feel we can compete at any level with the big three.
Now, there's a lot of buzz last summer that has since died down, but there's a lot of buzz that part of raising that capital to expand the wireless business would be to sell your stake in Chorus Entertainment, and that you'd even hired bankers to that effect. What became of that?
Well, I think, from our point of view, of course, listen, it's been, when you look at the whole broadcasting industry, lots of challenges. I think Chorus has had their own fair share. It's nice to see their last quarter actually improving. From Shaw's point of view, we're very comfortable with the balance sheet, the capital we need to deploy. We really don't need that money in any of the business as we go forward. I wish Doug and his whole team to continue to improve and continue to focus on growing that. And ultimately, I think for Shaw and Shaw shareholders, if we feel that we need to deploy the capital some other way, we will. But as of right now, we certainly don't need it, and we're comfortable, having Chorus continue and having our ownership share in there.
Now, we talked about the competition that you need to go after, and Rogers being one of them. Another one of the things, I get a sense when analysts who cover your company get together and they have a few drinks, they love to bring up this idea that there would be a merger between Shaw and Rogers. Do you ever see that happening?
Well, I don't know. I guess you could never say no. And I know I just went through the board, and we've made a lot of moves, Shaw, in the last few years to pivot to growth, long-term sustainable growth. And so we sold media, we got into wireless, we deployed billions of dollars, and we feel we're in a great spot. Always going to look at opportunities, always going to see where it makes sense. But I guess as I look at global size and scale, things become important that way, and scale is important, but we have so much opportunity right in front of us right here in Canada, and we're really excited about that. And Rogers will compete, and we love the opportunity to compete against them, and we're excited about that.
Now, upgrading your networks to 4G was a big boost for your business and your wireless expansion. Of course, 5G is the next big thing, but this is an interesting story in tech because this comes with a political element, and this, of course, would be Huawei and their roles in that technology. Do you have concerns about Huawei's hardware for 5G, or does it not matter where the hardware comes from?
Well, right now we don't have any Huawei in the system. Our provider is Nokia, and we've worked all the way along with them. We're very comfortable with them and the 5G strategy. We're really looking for the government to help. If truly we want competition of 5G, then we really need the government to make sure 600, 3.5, and milliwave spectrum auctions, there is a set aside, because there's no doubt in my mind the big three would love every opportunity with their balance sheet to knock Shaw off and not be able to get that spectrum, which is fundamental to compete against the big three. They have, half their spectrum they've gotten for free 15 years ago, and they can reharvest all that, and we're in a much smaller position of spectrum. Key to compete, economic growth, and all those other things that come from 5G. We want to participate. We want to go from 4G to 5G, and are very committed and working hard at that as we go forward.
I wanted to ask you about the Shaw workforce, because I think it took a lot of people by surprise last year when you had those buyouts, and I think then a lot of people were surprised about how many people took up the buyout. What's the morale like right now among the rank and file?
Yeah. Interesting you ask that. Many lessons you learn, and as we look at it, we feel a legacy company, you need to be more agile and lean for the future to compete, to serve customers how they want, and that's what we've done. The opportunity when you look at the end of the day, 3,000 people leaving the company is a massive change. We've done it over 24 months. We've managed it. We're very comfortable with their plans. But as you can see, the opportunity for us, you're not going to be able to do that incrementally by 20 people here and 20 people there. So very much focused in automation, default by digital, convenience for customers, self-install, ordering online, not even having to call reps. So we're really trying to make sure we deliver for Canadians how they want their products, how they want to interact with us. And we believe for the future, I think we've taken our medicine a bit early. I think we've actually stepped out ahead of people and say, wow, we're a company that really, we want to survive. We want to grow. We want to serve. We want to delight people. And so all these things we're doing is for the future, and we're very committed to that.